This video is sponsored by Bityard. With over 400 cryptocurrencies to choose from on their spot exchange, dozens of USDT pairs for futures trading, perpetual coin futures, trade commodities like gold, silver and oil, Forex, and major indices like Nasdaq. You can buy crypto from Bityard with over 50 different fiat currencies using Visa, MasterCard, Google or Apple Pay. If you like, you can use their copy trade facility, follow other traders who will execute trades on your behalf, or become a copy trader yourself. So if you want a bit of that, click the link in the description. Hello everybody, welcome back. Let me show you something on Bitcoin. Okay, so I'm going to put a case for what I think is most likely to take place next week, and I give you effectively my trade setup, you know, for a futures trade. Not that I'm promoting futures at all. If you've never done it, don't do it. If you want to do it, practice paper trading. You know, you can get demo accounts on Bybit and Bityard and probably a handful of others. And if you wanted to take it a little bit more seriously, put in, I don't know, $10 and practice with that using 1x leverage. You know, just don't go mad. But the reason I'm talking about futures particularly now is because I've been paying close attention to the price action recently, because there's, I've been saying it's like a penalty shootout at the moment. The bears have got a big case going for them, the bulls have got a good case going for them as well. Whichever direction it decides to go, I think it will be a continuation from that level, and my bias generally is to the up. But like I say, in a penalty shootout you can't really know exactly how it's going to go. You know, it doesn't matter what players are playing, you know, doing the penalties. It could go either way. That's why penalties are so annoying to watch. And that's what it's kind of like now. So this 200 exponential has not yet been reclaimed. We're a little bit above it right now. It's not very convincing. Plus it's Sunday as well, which is also a bit of a dodgy day. Weekends aren't that great, and we know that Bitcoin's correlation to traditional markets is pretty heavy right now. If we take it to the weekly, it's more relevant. So it's the 20 weekly moving average. This center of this Bollinger Band here is a really big deal for Bitcoin. While you're above it, you know, that's the good times. When you're below it, that's the bad times. And if you were a bear, what you really want to do is you really want to get a decent short from the center of that Bollinger Band. That would suggest that would be the best entry for a short position if you were a bear. And if you were a bear that, you know, is proclaiming, you know, the bear market imminent, you know, that's what you'd be dreaming about. Yeah, we've pushed right up to it, and bang, there you go, all the way down to, you know, $5 of Bitcoin. You know, that's what you want if you're a bear. Just like you'd like a bullish retest of it if you're a bull and you come down to it, and so on and so on. So the bears are loving this area, definitely, and there's obvious reasons for that. And like I say, you know, I've explained the itchy cloud, but for those who probably haven't seen it, yeah, we've got an itchy conversion baseline cross above the cloud with a Chiku span above price action. This is a continuation of an uptrend beginning, right? It's a little contrived because we've got a negative cross followed by a positive cross, but even so, it is a signal, and it's a signal that I love. It's my favorite signal. That's how much of a sado I am. I have favorite signals, and this is one of them. And one of the main things to note on this one is that we have to make sure that this Chiku span doesn't close within the price action. This is something we've been waiting for this weekend, you know, just saying, oh please, just don't close within this, because it wouldn't cancel it out completely. Yeah, the complete cancellation would when the blue crosses the red, but I normally would get out when this, you know, if I was in a trade that was based on this signal, I'd normally get out at the first opportunity was when this Chiku span touches the price action. It's not the be all and end all. You can carry on with it if you want to, but most of the time that, you know, when that happens, the trend is over, and this one, like I say, would be over more or less before it began. So like I say, if we dumped tonight or came down and closed below 44,400, you know, I would be slightly, you know, dismayed, you know, because the Chiku span has closed into the price action. If we came down tomorrow, we could sustain a price of 44,000 flat, you know, before I get dismayed. If we came down on Tuesday, we could sustain a price of 42,450, which is a bit better. And if we came down on Wednesday, we could sustain lows all the way down to basically 39,400 and still have this buy signal and a continuation of an uptrend technically intact, surprisingly, unless obviously we see this blue cross the red, which is a possibility if we come down this low, clearly. So that's your long-term time frame stuff. The bears and the bulls got a good case going for them. So this isn't something I would normally do on the channel, and the reason I'm talking about futures trading is because I've been paying close attention to it, and I want to get in a good position for a long. Longing at this level now is ridiculous. You know, all common sense would say don't do that. It's ridiculous. And what we see, if we think about what we're looking at here, is that there is, you could say, depending on how you decide to draw it, both of these formations are effectively, you know, they do offer downside, right? So what we've got here is a first of all, you've got either an ascending channel, right? So you could say, all right, ascending channel, this is an hourly, so I wouldn't normally do this. You could say, all right, there's your ascending channel. Okay, again, these normally break down, all right? It's just that's just normal. Remember, this is an hourly, so we're not looking for this to break down and go to $5 like those perma bears would say, although it could suggest, you know, much further continuation, obviously, based on other time frames and being below the center of the Bollinger Band, like all those precursors I said that the bears would be looking for. You know, that's what you know, the short term meets the weekly suggests not a good place to be if you're in a futures trade on a long. So we've got an ascending channel that could easily be seen as a breakdown. We've also, if you wanted to look at it in this way, we also have a rising wedge, which again is a bearish formation. So what you'd be looking for is it up, down, up, down, up, down, and effectively at some point soon fall off. You know, just break down from here. Both of these formations equally as bearish as the other, but like I say, depending on who you look at, or you know, who you follow, or how you draw it, it doesn't really matter. It's effectively a bearish formation. So ideally, what you could be thinking, what I'm thinking about doing, if I'm in the right place at the right time, which is seldom the case, you know, because basically father of two, doing it all on my own. I've got, you know, house to look after, I've got kids to drop off, I've got food to cook. I basically haven't got enough time to scratch my own ass, never mind make a futures trade. But if I were to be in the right place at the right time, I would be looking for this formation to play up and then move up to this maybe 45,500, which is the center of that Bollinger Band, where the bears will be really wanting to take positions, or the top of the actual range that we've had problems with in the past, which is 46,000 flat, give or take, and then see the rejection there, and then the inevitable breakdown from the ascending triangle, or the the rising wedge, or the ascending channel, right? That would be a good opportunity for a short, right? What would that short imply? Well, like I said, on the daily, it depends when it does it. It could be a good opportunity to take a short position, take a little bit of money, and then go back into a long position if the itchy cloud is still intact, right? That would be the perfect scenario. Like I say, I'm not looking to be able to capitalize on this because I'm probably not going to be around to do it. You know, I'm almost certainly going to be tying someone's shoelaces, making a packed lunch, driving a car. You know, I could be doing anything other than sitting at my computer, but it doesn't mean that I can't you know, plan for it if it were to happen. You could afford to have a tight stop loss around this level as well. You know, so if we wanted to get into a trade, or you know, if we saw weakness brewing on the small term time frames and you took that opportunity, then yeah, you know, your stop loss could be like 47,000 or something. It's not too bad. You've got to be in it to win it, haven't you, really? And if it continues to break out like the daily suggests it wants to, then great. You know, I've stocked up on all these shit coins, I've got all my Bitcoin position, I've got, you know, spot trading that's fine, it's my bias is to the up, but for futures trading you can't really afford to make those kind of errors. So it does look like we are on the verge of a possible dump stroke correction stroke pullback as a result of this formation, and another thing that concerns me a little bit and sort of feeds into that on the daily, despite all the other things that I've said which is reasonably bullish, is that the money flow index is quite high. You know, we're bordering the 90, and if this is Bitcoin's history going back to, you know, this is the Binance chart, but going back to, you know, late 2017, there was, I counted this, there was only 8 times that we were higher than where we are right now, each one of them more or less finding a peak before a pullback. So that is a slight concern. But look, we've got no bearish divergence on the daily. You know, the MACD's crossed above the 0 point, which is still diverging. So yeah, just because we're high doesn't mean we can't go higher. I just feel like there is an opportunity for basically a short that could then go into a long, which would be perfect. In this, again, you could short, well, I say you, I'm not asking you to do anything. I plan to try to short at this level, and then try to long back, which could then be one of those mega longs that goes on for quite a long period of time, as this trend suggests the trend begins and already has begun. So this dump could then go down, and then obviously the trend is already still intact, provided this Chiku span doesn't touch any of these candles on the way down, which is why I mapped out those levels of when I'd like to see a dump. Preferably I'd like to see a dump either Tuesday or Wednesday. That would be fine. We could sustain much lower prices and then get back into a long position. That would be the ideal scenario. So I'm thinking, if I'm around, if I'm available, if I'm able to do it, I'd like to try to take a short position with a tight stop loss around 45,000, maybe 45,600 or so. Stop loss around 47,000, and see where that takes me. Not get too greedy, maybe looking for, let's just say we caught the top of this range and we came down to where the 21 exponential is currently at this level, about 42,000. Like I say, if this happened on Wednesday, we could catch a move to 42,500. 21 exponential is almost certainly going to be there at the time, and we'll be looking to long that back at that particular level. But again, I'm not saying I'm able to do this, but it looks like there's a good case for this to happen anyway. Right, that's it really. There's no need to go any further. I'm looking for a bit of a pullback or a correction potentially at this particular level, and then try to long it back. That's the perfect scenario leading into next week, and that's what I think is most likely going to happen. And there you go. So I thought I'd leave it with you there. Thanks for watching. Hope you've had a nice weekend, and good luck trading next week. Take it easy.